What's going on, guys? My name is Brandon and welcome back to the channel. At the time that you are watching this video, we are currently in a stock market crash, stock market recession, stock market correction, whatever you want to call it. But the stock market is going down due to the coronavirus and other things going on in the world. People are going crazy, panicking, portfolios are dropping, people are losing money, and I wanted to provide you some ease in this situation, calm you down a little bit, take a step back and look at it from a bigger point of view. So today, I'm gonna be talking to you guys about my 2020 stock market crash strategy to make more money. Before I get started, if you guys haven't done so already, I'd greatly appreciate if you drop a like on the video and subscribe down below. It'll keep you up to date for the content that I produce, and if you subscribe, you'll be able to see any new videos that I post, and I really would like to have you here for my future videos because you're going to want to hear all this stuff. And also, if you guys haven't started investing or you don't have a brokerage to use, you don't know how to start, I have two links in the description, one for Robinhood, one for M1 Finance, where you can get a free stock or a $10 referral credit. I highly recommend having a brokerage right now or an investing account ready to go so you can put some money in, and the time right now is a beautiful time to start investing. If you've been watching the news, you should be up to date and knowing about everything going on, but especially the fact that the stock market is going down. They've been saying it in almost every news channel, saying how the stock market's dropping, people are freaking out. And you got to understand, people are freaking out because people's retirement portfolios and just normal investment portfolios, their values drop tremendously. If you look at my portfolio right here, I'll show it off at the side real quick. It's currently still sitting at $1,266, but look, I'm down $209 just in the past 2 weeks. A few videos ago, I was actually up about, $70 or so in my M1 Finance account, and now we're down $200. So it's definitely something to see, especially with such a small account that I have. The main point of this video is to show you guys what I'm doing with my portfolio during this stock market crash. So let me just get straight to the point and say that I am staying invested during this crazy time, and actually I'm putting more money into my account, which some people might be saying,
whoa, why are you putting more money into your account? You're gonna lose money.
Chill, let me explain. I'm gonna pull up my M1 Finance portfolio on my computer just because the layout looks a lot better and it's easier to explain things, so let me get that real quick. So if you look at my portfolio, it's currently sitting about $1,266.56. Again, if you look at the gains here, I'm down $209. In the past day, we have seen some gains, about $102 plus. So think about that. I'm down $200 in total, but I gained 100. I was at minus 300 a day ago. So still, in the past week, we've seen $163 lost. Past month, $285 lost, 20%. Look at this right here, 20% of our money has been lost. For every $1,000 you put in, you basically lost $200. Also, if you look down here in my portfolio at all my different pies here, every single one of them is in the red. If you look at the gain here, everything, minus $39, minus 45 in real estate, minus 17 healthcare, 27. A big one we're getting hit at is financials, down 47%. Now, there's about three options you can do in this crazy time going on during this stock market crash. The first one I'm gonna be talking about is what I'm not doing, which is selling out of my portfolio. Now, there are people out there that are panicking due to everything going on, and what they're doing is they're taking their portfolio, they're hitting this buy sell button, and they're basically hitting sell $1,266, and they're selling all of their holdings. They're pulling themselves out of all of the companies that they invested in. Like if you look right here, they're pulling themselves out of Disney, Coca-Cola, or whatever they're investing in, and they're taking their money out. And the reason that I don't like doing that is because the second that you sell out of your portfolio and sell all of your holdings, this money right here, the $209, it becomes permanent. That's a permanent loss that you've taken. If you don't sell out of your portfolios and you just wait, which is the second strategy you can do, keep investing. As long as I wait it out, eventually this number will go up over time. If you look at the S&P 500, yes, the big drop looks scary, but if you look at the past 5 years, we've had numerous drops like this, or we've had a couple drops like this in the past from September to December of 2018. And look, if you would have sold out of your portfolio right here on the way down, you would have lost money. And if you decided to not start investing at the right time, then you wouldn't have been able to see all of these gains that we've seen since then. Also, the max chart. Look at how long the S&P 500 has been going up since, look, the 1980s, even before that, it's went on a constant uptrend. And we've had recessions here, like, look, 2000 down to 2002, 2007 into 2008, 2009 drop. But if you would have just kept your money invested in your portfolio, eventually you would have seen gains. So I am not going to be selling out of my portfolio because I enjoy the companies that I'm investing in. And as I'm investing in these companies, I'm still getting paid dividends. So if you look right here, in the past few days or 1 week, I've got paid by so many different companies. Look, from March 2nd to March 13th, I've got paid from about 25 different companies paying me little bits of dividend payments here. And yes, they're small, they're not super big at first, but over time, as I put more money into these companies, they're gonna pay me more. And that's the goal of this portfolio. So next time I put more money in, Vanguard Real Estate's gonna pay me 40 cents. If I put more money into Microsoft, next time they're gonna pay me 5 cents. And that money will slowly increase over time. I've also, in the past week, increased how much money I put in my portfolio. So usually I put in about $30 a week, but I put a couple extra payments here. If you can see, I put in $15 on the 27th, $40 on the 28th. Coming into this week, I put in an extra 30 here, an extra 10 there. I'm just gradually putting money in, not blasting out, $1,000 here at once, just because I don't want to just put all that money in. I just want to gradually put the money in so that I can slowly dollar cost average my way down into these companies. What I want you to think about is this. Companies are on huge discounts right now. So if you start investing now, when the companies boom back up, when the coronavirus goes away, you are gonna see gains. Look at Disney, for example. Disney's worth $102 right now. If you look at the chart here, right before this big drop, we were at about $150, $151 to be exact. Disney's dropped a third of its value in the past few days. Just 5 years ago, Disney was worth around this much, $102. You're basically getting a free coupon to start investing as if you started 5 years ago. So it's a beautiful time. The past few years, the company's been going up and up and up, and you'd be buying on an uptrend. But now, since it's dropped, you have an opportunity to buy at a low price of 100, and eventually, hopefully, as you've seen in the max chart here, the companies went up over time that eventually you are gonna see profit with your money. Like I said before, I'm not blasting my whole savings and putting all the money in the stock market, but I do recommend putting a little bit extra than you usually would, just because it's such a good time. We don't get opportunities like this often, so put a little bit more money in just to see, but only what you're comfortable with. Take a step back and look at the bigger picture. This is temporary. The coronavirus is temporary. If you can just wait it out a few years, I can almost guarantee you that a majority of these companies that are dropped down low are going to recover. Yes, some of them might go out, but if you invest in reputable, blue chip, well-known companies, you don't have to worry too much about that, because in a few years, these stocks are gonna recover, the economy is gonna recover, and things are gonna be a lot better than they are right now. Alright guys, that is about it for this video. I hope you guys enjoyed. If you guys have any comments or questions about investing, go ahead and leave them in the comment section. I'd love to talk to you guys about that. And again, if you haven't signed up for M1 Finance or Robinhood, there's links in the description. Start investing now. Start investing now. I cannot emphasize that enough. And then also subscribe down below for future videos. You guys have a blessed day. Keep investing, and I will see you in the next one. Peace.